Tesla stock is soaring today, up over 3.5%. That is because Li Auto, based in China, just crushed their earnings estimates. Revenue for Li Auto soared 130% to 5.88 billion, and analysts expected 44 cents of EPS, and Li Auto delivered 60 cents of EPS. Li Auto jumped 16% in the trading day today, but what's actually most interesting about this that I think is specifically interesting in regards to Tesla is that Li Auto actually guided lower than analyst expectations. Yeah, and the stock went up 16%. It says the EV maker forecast Q1 revenue of 4.4 to 4.53 billion, up 66 to 71% versus a year earlier in local currency terms, though that's below analysts' forecast. Deliveries are expected to be 100 to 103,000, up 90 to 96% versus a year earlier, but down from Q4's record of 131,805. That's also under Wall Street's targets. So let's explain exactly why that's so positive for Tesla. Well, it shows one thing in particular, and hopefully you already know this, but if you don't, it shows expectations are just very, very low. Just meeting expectations is good news, and maybe Wall Street consensus is actually too high for these stocks. Even if a stock like a Li Auto, well, does well on any given quarter, but guides down for the next quarter, you're priced for dog shit. Let's be honest. You're priced for Tesla, for Li, for NIO, for Lucid, for Rivian. Some companies deserve where their stocks are at. I mean, Lucid, for an example, deserves to be bankrupt. But Tesla has gotten beaten down just because they did not give guidance. In all reality, the situation looks like it might be better than expected. Whether it's GM, Ford, Toyota, Hyundai, whether it is Li, NIO, or any of these other EV companies or auto companies in general, they're coming in with their earnings and giving relatively good guidance. Some people, some investors are expecting the floor is going to fall out for the automobile industry, and that just is not happening. So when Tesla was priced, or is priced still, for a bad 2024, if you get news that pushes back on that, that says, maybe it's not going to be that bad, that's great news for Tesla stock and justifies Tesla's almost 4% rally today. Whether or not we do see this rally continue will depend on the economic data coming out tomorrow and throughout the rest of this week. BYD executive said this about Tesla today. Quote, "Without them, I think the global EV market could not run so rapidly. So we respect them a lot. I think they are a partner, and also they're like a way together. We can really help the whole world." Tesla BYD partnership coming? Wouldn't surprise me based on the language that we're hearing from executives with BYD. And the first shipment of new Model 3s have now arrived in Vancouver, Canada. According to S&P, quote, "For 2023, the Tesla brand scored repeat wins for overall loyalty to make, highest conquest percentage, alternative powertrain loyalty to make, and authentic market loyalty to make. The popularity of both the Model 3 and the Model Y among current owners, along with the brand's ability to attract many ICE customers to the BEV space, contributed to Tesla's multiple awards for the second year in a row." Renault has unveiled the R5 EV with a 52 kilowatt-hour battery, 249 miles of range, and the price starts at $27,000. Deliveries begin in Europe in late 2024. We do have here a Tesla South Pasadena police cruiser with a new light bar on the side, and yeah, some people think this looks pretty good. We now have the first ever baby blue Cybertruck spotted in California. Kim Kardashian is making social media headlines again for matching with the interior of her Cybertruck, white on white and black on black. Overall, a lot of people are not going to care about Kim Kardashian driving a Cybertruck. I'm sure most middle-aged male viewers that watch this channel, the demographic is like 35 to 55. A lot of you guys are like, Kim Kardashian, who cares? She drives a Cybertruck. But she does have a ton of followers that likely have no idea the Cybertruck exists. So when these photos come out, when she posts about it, I think that's a bigger deal than what a lot of us may give it credit for. And again, if Tesla's getting that advertisement for free, that is a win-win all around for Tesla. And could start to kick in that halo effect a little bit faster than otherwise it would have if you do have all of these quote-unquote celebrities promoting the Cybertruck just because it's a cool looking product. It's kind of a win-win on their part as well. You get more people talking about you driving this weird product. I mean, there's obvious reasons why people are posting about it. Energy Secretary Granholm says the U.S. is on track to meet 50% EV target by 2030, despite slowing growth. We will have quite a bit of big companies reporting earnings still this week. Today in After Hours, you will have Unity, Zoom, Workday, Him, Hers, iRobot, Car Gurus, Everbridge, and Heiko. Tomorrow morning, Norwegian Cruise Line, AutoZone, Lowe's, Lending Tree, American Electric Power, Shift4 Payments, Cracker Barrel, American Tower, Macy's, and Scotiabank. Tomorrow in After Hours, Devon Energy, First Solar, Cava, Array Technologies, Beyond Meat, Lemonade, Splunk, and Virgin Galactics. And then Baidu, Novavax, Advanced Auto Parts, TJX, and other names as well, Wednesday pre-market. Wednesday and After Hours is going to be one of your bigger days. You'll have Marathon Digital, Snowflake, Salesforce, AMC, C3AI, Paramount, Okta, IONQ, and Duolingo. Thursday pre-market, Celsius, Best Buy, Kronos Group, Polestar, AB and Bev, Bath & Body Works, and Six Flags. Notably there, Polestar for your European market. We're seeing good earnings coming out of the EV market in China. How is Europe doing? We'll see what Polestar has to say. Thursday and After Hours, we have Zscaler, SoundHound, Fisker, Dell, Autodesk, Hewlett-Packard, Viva, and Elastic that reports earnings. Friday pre-market, Plug Power, and Fubo TV. So believe it or not, a big theme of this week is still AI with Zscaler, C3AI, as well as Salesforce and Snowflake. Some of those names are kind of your secondary AI trades, your data trades, your cybersecurity trades, and that can affect the overall AI trade. And the AI trade has really been the thing that has kept the markets alive at this point. I think the markets would be much lower today if we did not have this AI trade going on. On StockTwits, if we take a look at the sentiment barometer, today's sentiment is neutral in Tesla with a score of 50. Sentiment yesterday was 47, so a little bit more bullish today, but I'm surprised given Tesla's up almost 4%. You're not seeing more people that are overly bullish on Tesla. I find that pretty interesting, at least not over here on StockTwits. People can be really bullish on Tesla other areas, but retail, not as much on StockTwits today. Message volume is definitely higher though. Yesterday it was 34, categorized as low, and today it's 49, which is considered neutral. The participation ratio is creeping higher now at 57. That means if there's 100 messages on StockTwits that are sent by one person, that would be a low participation ratio. If there is 100 messages sent by 50 people, that would be a high participation ratio. So there's more people, more accounts talking about Tesla today than we have seen in a very long time. So that is good news. Cybertruck search trend activity continues to increase, now at 26. And this is, I think, the most organic non-Tesla user base searches that we have seen in a very long time. Okay, I don't think we've ever seen this many individuals learning about the Cybertruck and this new product Tesla has. All of these other spikes, a lot of this were just investors, right? I think this is a lot of organic searching you're seeing to the Tesla brand. If you take a look at regionally where you're seeing a lot of this activity, California is number 1 at 100. Washington is 75 and number 2. Nevada is number 3. Utah at number 4, and Texas at number 5. And then you see Florida not too far behind at 58. 8. So your biggest Tesla markets are starting to get more search activity. And again, I don't think this search activity as of right now has anything to do with investors. I don't think investors are going out and searching about the Cybertruck at this point. I think this really is just your consumer base that is starting to see these products, celebrities posting about the Cybertruck, and that's really starting to help. I think this is the early innings of the Cybertruck halo effect. Tesla currently has 3.28% short interest of free float, $17.42 billion worth of short positions currently in the stock. What's actually fascinating about today is the stock's up almost 4%, right? At least at the time of recording this video. By the time you guys see this video, who knows where Tesla could be. The last couple of minutes of the trading day tend to be pretty volatile, but the cost to borrow fees are 10%, 9.87% to be specific. So Tesla is seeing a lot of shorting activity today. The higher the cost to borrow fees, the more demand there is to get their hands on shares to short, the higher the cost to borrow fees. That's actually kind of wild. Typically, when you see big green days for Tesla, there's less shorting activity, but today there's more. Imagine if you were not seeing this today, Tesla stock would probably be up 5 to 7% today. Option activity from hedge funds and institutional investors is very positive today, though. Positive order value of 69%, and you have seen 849 orders totaling $136.24 million. If you take a look at volume, this includes retail, hedge funds, institutions, money managers, everyone trading Tesla stock. Volume today is 61.5% to the call side, 38.5% to the put side. Open interest to the call side is 68.1% and to the put side 31.9%. The percent of stocks above their 50-day moving average is down 1.09% today, now at 50.7% of stocks above their 50-day moving average. Now the percentage of stocks above their 50-day moving average peaked out the same day Tesla peaked, December 28th. It's been falling ever since. So your average stock has been falling for over 60 days now, really since the start of 2024. That means this week is going to be very critical for the markets, because what either happens here is big tech will fall, and you're seeing that today with stocks like Google down about 4%, or you get a catch up with small and mid-cap stocks, interest rate sensitive names start to do better. I've talked about this before plenty of times here on the channel, but the S&P 500, the SPY ETF, tends to inverse the dollar. Ever since the Rona back in March of 2020, the dollar fell, stocks did well, up until late 2021 when the dollar started to rise, and this was 2022. What happened? Dollar rose a lot, stocks fell a lot. And then you started 2023 and the dollar fell all the way until July. And 2023 was a great period in markets, specifically like after the banking crisis in March, May through July. You've seen a big rally in markets during this time. What happened? The dollar bottomed in July and started to rise. This caused a 10.5% correction in the markets. 10.5% correction. The dollar fell following the lows around November of 2023. And then we've seen a pretty parabolic rally in your small and mid-cap stocks as the dollar fell, as the market started to look forward to rate cuts from the Fed. During this rally, we were pricing in 7 rate cuts in 2024. Well, now the dollar has risen a lot, about half of the rally we've seen that caused the 10.5% correction in the S&P. So just based on this rally in the dollar, the S&P, the SPY ETF, should probably be down 5% from where it's currently at. Just arbitrarily looking at this. This was an 8% rally in the dollar. We have seen a 4% rally in the dollar here, and this was 10.5% correction. We should probably be down about 5% right now in the SPY. Now, I know it's not always going to be dollar for dollar, percentage for percentage. That's just arbitrarily looking at this. At the same time, you have went from pricing in 7 rate cuts to 4 rate cuts. That, in my opinion, should also have some negative effect on the SPY, on your headline, just broad markets. Now, the broad markets, they really trade based on your Magnificent 7, Mag 6, whatever terminology you want to put on it, your big stocks. Those are the ones that really control the market weighting of the index. And we'll talk about in the next video later on tonight at 8:30 p.m. Eastern Standard Time why this week will be so important for those big tech stocks really over the next couple of weeks, especially as we get the ARM IPO lockup period expiring on March 12th. Same day we also get CPI. That could be another pretty volatile period or volatile week for your big tech names. Tesla continues to run about 2,000 different ads globally via Google. Google Trends data for the Tesla lineup again continues to show an acceleration of the Cybertruck. You are seeing an uptrend in Model 3 search activity as well from 35 to 38, a slight deceleration for Model Y search trend activity from 39 to 35, and the Model X usually stays right at about where it is at 10. The latest AI investor sentiment survey that we got last week was 44.3% of investors were bullish. That was up from 42.2% the week prior. Neutral investors dropped from 31.1% to 29.5%, and bearish investors dropped from 26.8% to 26.2%. 10-year Treasury yields are up 4 basis points today. 10-year Treasury yields are sitting at 4.301%. That's actually interesting considering what you're seeing in the broader indexes today. The Russell 2000 is the outperformer, up 0.33%. The Nasdaq still holding on in the green, up 0.09%. The S&P is down about 0.2%, and the Dow is down 0.06%. So that's actually interesting. 10-year Treasury yields are rising 4 to 5 basis points today. They're kind of fluctuating in that range, which is a decent jump for 10-year Treasuries on a one-day basis, and the Russell's outperforming. You don't see that all too often. As far as Fed policy and the next Fed meeting, that will happen in 3 weeks, 1 day, 22 hours, and 23 minutes from now. The next Fed rate decision will be on March 20th, 2024 at 2 p.m. There's a 4% chance of a rate cut, a 96% chance of a continued pause. For May 1st, the meeting after that, there's an 82.1% chance of a continued pause, a 17.3% chance of a rate cut, and 0.6% chance of 2 rate cuts by then. So on the day today, you're actually seeing the odds jump quite a bit of a continued pause. So higher for longer being priced in here today. On Friday, the probability for a pause in May was 76.4%. Today, it's 82.1%. Another reason why today's outperformance of the Russell and your interest rate sensitive names is surprising. What's also happening today is the odds of a continued pause through June are also rising. In fact, you're almost pricing in the first rate cut in July, which is kind of crazy because we were pricing in the first rate cut in March. The odds of a pause on last Friday, 34.5%. The odds of a pause today, 41.2%. 41.2%. That's a huge jump. That's like a 7% jump. Now, the odds of a rate cut in June, they're still priced in, but it's getting close. 49.6% compared to 41.2% for a pause. So there's only, one data report that is hot, and you're going to be pricing in a pause at least until July. July, you're still firmly pricing in your first rate cut, 45.1% odds there. So you're not really seeing market conditions that should be favoring small caps today. I think small caps are just so beaten down, valuations are low, as you are getting stocks like Google selling off today, even Nvidia from its highs selling off today. Some people are just deploying that capital into small cap stocks. Where else are you going to put your money at this point? The only place you're really going to find any bargains is in the Russell 2000. So from that perspective, it makes sense. But the data, what we're seeing today, you can't make sense of the outperformance in your interest rate sensitive names. TLT today is down 0.63%. Again, when TLT falls, that's usually not a great day for small caps. So another kind of weird thing happening there. The dollar is down 0.1% today, and gold is down 0.38%. Tesla stock still holding that 4% gain today, and look what happened. You bounced right off of this uptrending line of support. It's pretty clear you have a gap to fill up to about 207. I think if we get to 207, we likely rally to 210. Now, as I said in the last video, I think the upside you get this week is capped around 210 because I do think we're going to have problems with the economic data coming out later in the week, specifically on Thursday with the PCE report. Unless the estimates are wrong and PCE comes in a lot lower than expected, markets are going to have to say, hey, Fed's not going to give us cuts for a while, and when they do, they're probably not going to cut that much. The markets have already done that, though, so you can make an argument we're kind of braced for that, but I don't think equity prices are actually reflecting that, if that makes sense. Like, it's priced in. We've went from 7 or 8 cuts priced in to 3, and even today, the odds are getting pushed out further for rate cuts. Now we're almost expecting the first rate cut in July. But it's like the markets understand that, but haven't priced that in, which is very weird. Either you get kind of more rate cuts start to get priced in again, or I think the markets have a day of reckoning to kind of reconsolidate, go over expectations for Fed policy and what that means for stock prices. I think Tesla's reevaluated to that extent. I think Tesla's trading as if we're going to get 3 rate cuts, but if the broader markets do fall this week, in which I'm expecting will happen, I think that also drags down Tesla. So I think you can see a large move. This 4% move today really cushions the potential downside. Now I would say downside's looking like 190, 185, whereas before it was maybe a little bit lower than that. So a lot of cushion today. You do want to respect this uptrending line of support until it breaks. So that would signal tomorrow support could be around 194 to 195. Just based on where this trend line is at. And it looks like, just from a technical basis, Tesla wants to break out, wants to get a leg up to the upside. I don't know what causes that. I don't know if we get news this week. Anytime now we could get news of Tesla laying off some of their staff. That's going to mean hopefully higher EPS for 2024, and that would likely send Tesla stock higher. But I don't know if that news is going to come out this week, right now, tomorrow, next month, next quarter. Who knows? It might not come out at all. So there are variables that we cannot account for, like Li Auto earnings this morning that caused Tesla to go up 4%. But just looking at the chart, Tesla wants to go higher. The data, to me, makes me think markets will fall and Tesla could fall. So I am expecting a large move this week, and we're definitely off to a solid start on that note. If you've seen the video from yesterday, I said it's literally in the title of the video. I expect a big move for AMC or Tesla. I think Tesla is going to move big this week or something along those lines that I said. And it's definitely happening. Now, the MACD is still very negative. When that thing goes positive, that could be another source of potential, trading, buying pressure coming into the stock. The RSI is at 50.44. So believe it or not, since you've rallied from 175 to almost 200 as we are at today, I mean, the RSI is still neutral. So Tesla has rallied on a percentage basis about 14.5%, but you were so oversold that you're now neutral. Tesla sentiment on the RSI, relative strength, is neutral. That's kind of insane. So Tesla, if we do indeed hit 70, which is normally what happens, you go oversold, you bounce, you hit 70, you fall down, you bounce at 30, you hit 70, you bounce, you hit 70. It tends to happen over and over again like that in a very patternistic, strategic kind of way. That would definitely indicate to me Tesla stock can go into the high 210s, the high 220s, maybe in the teens, right? We'll see though. Let me know what you think about this information down below in the comment section. We have a lot to go over in the next video, so stay tuned to the channel for that one. Also going to be a jam-packed video, 8:30 p.m. Eastern Standard Time tonight. If you guys want to come trade with us live in real time, there's a lot of earnings this week. Earnings season is the best season to potentially hit some big trades. Check that link out down below in the description of this video. If you guys also want to stay tuned with what's going on the X account, I share a lot of different things, Tesla news, hedge fund, institutional kind of opinions over there. Lots of things that you can learn from. It's just a great tool to have overall. Check that out, link down below in the description of this video. It's Michael Tyler as well if you just want to search it on your Twitter search bar. It's pretty easy to find. I think it's the same profile picture as I have here on YouTube. Nonetheless, guys, enjoy the rest of your day, and I will see you in the next one.